is Cecil B. Moneygetter, host of Money Talks, a new financial news upload that is laser focused on digital finance, cryptocurrencies, robotics, electric vehicles, stocks, the cannabis industry, and much, much more. Tune in and join us every Monday, Wednesday, and Friday at 7 p.m. Eastern on our Information Meets Execution YouTube channel as we bring you financial news uploads, one trending topic at a time. And don't forget to stay listening, because money talks. Good evening. Today is Friday, July 26th. You're watching Money Talks. First up in cryptocurrency news, Bitcoin bounces back to 67K, Ethereum to 3,200. And what does this all mean? Bitcoin has rebounded back above 67K thanks to Bitcoin ETFs gaining traction while Ethereum ETFs face headwinds. Data from July 25th reveals a net outflow of $152 million from Ethereum spot ETFs, highlighting a growing investor apathy towards the world's second largest cryptocurrency. This trend highlights the evolving investor sentiment in the digital asset space and raises questions about the future of Ethereum as an investment vehicle. According to recent data, Ethereum spot ETFs saw a total net outflow of $152 million on July 25th. The Grayscale Ethereum Trust, a major player in the space, bore the brunt of this exodus with a net outflow of $346 million. The latest withdrawal brings Ethereum's historical net outflow to $1.157 billion, indicating a persistent trend of investor retreat from this particular fund. However, the Ethereum ETF market wasn't uniformly negative. Grayscale's mini Ethereum ETF bucked the trend with an inflow of $58 million, while BlackRock's ETF attracted $70 million in new investments. These contrasting flows suggest a possible redistribution of assets within the Ethereum ETF ecosystem rather than a wholesale abandonment of the asset class. Ethereum is up 2.4% over the past 24 hours, trading around 3,200. It trails Bitcoin's 5% over the same time frame. On the Bitcoin front, the picture was somewhat brighter. Bitcoin spot ETFs recorded a total net inflow of $31 million on the same day, while Grayscale's Bitcoin Trust saw an outflow of $39 million. BlackRock's ETF offset with a substantial inflow of $70 million. The total net asset value of Bitcoin spot ETFs stands at an impressive $59 billion, underscoring the continued dominance of Bitcoin in the crypto ETF space. These flows come against a backdrop of growing skepticism about Ethereum's market positioning. According to 10-Time Research, Wall Street is struggling to articulate a compelling narrative for Ethereum. Unlike Bitcoin's clear digital gold proposition, BlackRock's characterization of Ethereum as a bet on blockchain technology fails to resonate with traditional investors who typically shy away from poorly understood investments. Moreover, the lack of aggressive marketing campaigns from Ethereum ETF issuers and the absence of high-profile figures like Vitalik Buterin in mainstream financial media has been flagged as unusual. The apparent lack of promotional effort stands in stark contrast to typical practices during IPOs or other major financial product launches. The current situation raises questions about Ethereum's future as an investment product and its ability to compete with Bitcoin for institutional dollars. The research further states, as the crypto market continues to mature and integrate with traditional finance, these trends will be closely watched by investors and analysts alike. For those seeking deeper insights into these developments and their implications for future of digital assets, Benzinga's upcoming Future of Digital Assets event on November 19 promises to be crucial. Up next in news from Wall Street, the stock market looks to end the week sizzling and on a high as Nvidia looks to lead the way in pre-market ahead of key inflation data. After the severe pounding the tech space received in the past 3 sessions, it might be rebound time. However, any recovery will largely hinge on whether key inflation data confirms the continued downward trajectory in pricing pressure. The major index futures are notably higher early Friday. Tamer inflation data could reinforce hopes of a September rate hike and more for the rest of the year, proving supportive of the market rally, especially amid the small cap space. Traders also take cues from some quarterly reports as they nervously wait for next week's earnings news. Apple, Amazon, Microsoft, and Meta platforms, and the Federal Reserve's rate-setting meeting. In pre-market trading on Friday, the SPDR S&P 500 ETF Trust moved down 0.75% to $542.43, while the Invesco QQQ ETF gained 1% to $462.87, according to Benzinga Pro data. U.S. stocks closed Thursday's session on a mixed note, as early optimism generated by strong GDP data did not sustain throughout the session. Negative tech news weighed down on NASDAQ Composite and S&P indices, sending them notably lower for a third straight day. The former pulled back toward its lowest close since June 7th, and the latter slumped to the lowest since June 11th. The 30-day stock Dow Jones Industrials average ignored the negative start and traded mostly above the unchanged line. Get in the comments and let me know what you think and how you feel. And in news from the cannabis industry, New York's cannabis consumers could be SOL as New York's exotic cannabis supply falls short. As New York's cannabis industry gains momentum, retailers and processors face a major challenge: a shortage of high-quality, locally grown cannabis flower. Despite the opening of numerous retail stores, which has significantly driven up demand, the supply has not kept pace, leaving many to struggle in sourcing premium products. The shortage problem is real and is going to persist, Kate Miller, owner of Peregrine Toke and Sharon Springs, told NY Cannabis Insider. This shortage is largely due to many growers scaling back or ceasing production altogether following a series of botched dispensary rollouts and the failure of farmer assistance bills to receive approval from Governor Kathy Hochul, says Miller. This has left retailers scrambling to meet consumer expectations without sufficient product. Compounding the issue, regulatory missteps have discouraged farmers from increasing production, fearing further market instability. Farmers were weary about sinking more resources into an uncertain market, Miller said. Moreover, the preference among dispensary owners for indoor-grown cannabis, which generally yields higher THC levels due to controlled climate conditions, has further strained the limited indoor growers who are already battling against more financially endowed multi-state operators. In the midst of this turmoil, New York's Office of Cannabis Management introduced rules for personal home cultivation. While this doesn't offer an immediate fix to the supply issues, it could serve as a medium-term relief for a strained market. According to new regulations, adults over 21 can cultivate up to 6 plants at home with a household limit of 12. This move aims to mitigate the reliance on commercial growers and empower individuals to meet their own needs, potentially helping to ease the demand on commercial supply. Remember to tune in Monday through Friday, 7 p.m. Eastern, to stay ahead of the curve and listen up as money talks so that you can make informed decisions in this fast-paced digital age. Remember, if you found this information important, to like, comment, share, and subscribe. See you at the top. Holla.